New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stock in stalemate, oil extending gains as President Trump says the US-Iran ceasefire is on massive life support. Staying on, UK Prime Minister Keir Starmer tells his cabinet he will stay at his post amid mounting political pressure. And all of that ahead of a fresh inflation print in the US later this morning. It's already been a big night across Asia. Let's get over now to Winnie Sue for the latest. Winnie.
Good morning, Bonnie. Indeed, it has been a very interesting day for Asian stocks, especially as we see that the MSCI Asia here under a bit of a pressure with losses led by the South Korea's Kospi index. We're looking at that benchmark down more than 2% today, with the won also weakening by more than 1%. And that is all coming after a top policymaker said that the country should pay its citizens a dividend from its tax from the AI revenues. Now you flip the board and see how that has driven this roller coaster in the Kospi index, losing as much as $300 billion in value in just 97 minutes. And it did pair some of the losses earlier today when we heard that this is actually not a windfall tax. But still, you can see that the markets have become quite jittery after having risen more than 80% so far this year.
Winnie, thank you very much. Winnie Sue there in Hong Kong, and a big morning in Britain in particular as well. Louise Moon is in London with a check on Europe. Louise.
Indeed, Bonnie, we're focusing on London and the UK this morning. Obviously, the focus is on this political risk for Starmer. Will he survive the day? Calls for him to resign. And as you mentioned, he has just told Cabinet that he will stay, but eyes are still firmly on that. So you've got the 10-year yields and the 30-year yields being hit, as well as the pound. And, you know, options traders seeing more movement for the pound, which could happen through the day. In terms of the equity markets and how they're being impacted, we're looking mostly at banks and banking stocks being hit across the board, the likes of NatWest, Lloyds, all of them really being hit on potential for a change in leadership, weaker growth, potential higher taxation there.
Louise, thank you so much. Louise Moon in London. And here in the US, this is the story that is setting the agenda for today. We have Brent crude very close to $107 a barrel again, and WTI well above $100 a barrel. Also, the 30-year yield above 5%. This is the picture, the AI narrative slightly in the rearview mirror at this point, and we're now back onto geopolitics. Of course, the president traveling to China, but that doesn't stop him commenting on Iran's proposal or rejection of the US proposal and talking about it being on massive life support. And you can just see that the pressure is building. We have the VIX very close to 19 once again, the dollar index up 0.3%. And as you can see, after several days of records, so, you know, no sympathy here, we do have futures pointed lower for this session at least. Let's get to some individual market movers now and over to London and Chloe Melly. Chloe.
Good morning, Bonnie. Hims & Hers is down quite significantly this morning after guidance missed estimates. Analysts are saying that the results are quite messy because the company is facing higher costs as it transitions into branded products. And so that means some near-term pressure on profitability. And it also means that this noise in financials might take a little while to clear out. So we're down about 15% for that company. We are also in the red for GitLab after the software company announced some job cuts and operational changes. And in response to that, Raymond James downgraded the stock, saying that those internal changes could actually push away top talent and result in a weaker and less capable workforce for GitLab, and therefore the shares are being hit quite a lot this morning. And finally, AST SpaceMobile is also down this morning after the satellite internet company reported first quarter revenue that missed analyst expectations. Analysts are saying that launch problems remain the biggest risk to the target of 45 satellites by the end of the year. And there's a little bit of weakness on the back of those results this morning. Actually, quite a lot of weakness, down more than 11% for that company.
Chloe Melly, thank you so much. Much appreciated. Also coming this hour, we're going to speak with Apollo's head of credit, and that's from the JPMorgan Capital Markets Conference. We'll be drumbeating to the CPI report as well with Kallum Pickering of Peel Hunt. And Roche Diagnostics CEO Matt Sause is going to join this as the firm wins clearance in the EU to sell a blood test diagnosing Alzheimer's. Let's start with the UK, though. Deterioration in those markets in the last few minutes. Prime Minister Keir Starmer telling his cabinet he will not be stepping down amid growing pressure to do so. Bloomberg's Lizzie Burton is live from Downing Street in London with the latest. Lizzie, what's been happening behind closed doors?
Well, the Prime Minister, as you say, defiant that he is going to stay at number 10, even if it does seem that he's losing his fight to stay. Just over the past half hour, he's been meeting with his top team behind that black door there, and he's released a statement saying that he takes responsibility for the election result last week. This is what he's been telling his cabinet ministers. So the Labour Party leadership process has not been triggered yet because the country expects us to govern, he says, and that is what we'll do. In other words, he says he's going nowhere. Now, this is a Prime Minister, Vonnie, who isn't known for his ability to read the room. Just over the weekend, he was insisting that he intends to stay for the next 10 years. The reality is now at least 80 of his 403 Labour MPs have called for his departure. We've already seen the resignation of a junior minister, Miata Van Boele, over his leadership. And therefore, it is an ugly picture, as you've all been painting, for UK markets this morning. The 30-year gilt yield only climbing. We're up about 12 basis points now. It's the highest since 1998. The pound's hit a 2-year low against the euro, really all because traders are worried about anyone who would be more fiscally lax than this Prime Minister. Now, an interesting question is whether you could see a different Chancellor, the same Chancellor with a different Prime Minister. Allies of the Chancellor, Rachel Reeves, suggesting that she should stay on, even if there is change at the top. That, according to the Financial Times. But she's going to be speaking, or is planned to be speaking, at 11:30 a.m. London time. So we'll wait to see what she has to say. But in terms of who takes over from here, there is a rift in this Labour Party. On the one hand, there are those calling for an orderly transition, in other words, so that the Mayor of Greater Manchester, Andy Burnham, who's leading the betting odds to replace Starmer by the end of the year, has time to get a seat in Parliament. And those calling for a swift timetable, the likes of an aide to Wes Streeting, the Health Secretary who resigned. Streeting, of course, also a runner and rider to take over from Starmer. So for markets, it seems to be a question of when, not if, Keir Starmer leaves as Prime Minister.
Lizzie Burden in London, thank you so much. Turning now to the Middle East, the ceasefire between the US and Iran at a standstill.
It's unbelievably weak, I would say. I would call it the weakest right now. After reading that piece of garbage they sent us, I didn't even finish reading it. I said, I'm not going to waste my time reading it. I would say it's one of the weakest right now. It's on life support.
Joining us now from Dubai is Jumana Bersechi. Some very dismissive comments from the president there, Jumana, but Iran has not really changed its position, right? It still wants what it wants and it's not budging.
Yeah, well, certainly that's President Trump's characterization of the ceasefire. He described it as being one that is very weak and on life support. But I will just say and remind everybody that the ceasefire is still holding up. And even though it's been described as fragile, we're still very much in a state of ceasefire. But of course, the question is where we go from here. And President Trump in that same press conference was asked whether this would necessarily mean a return to military action, to kinetic action. And he said a diplomatic solution is still very possible, but in the same breath also describing Iran's proposal as a, quote, piece of garbage. And so that type of language doesn't necessarily go down well with Iran's leadership, as we've spoken about many times in the past. And the messaging coming from them this morning, the parliamentary speaker, Mr. Ghalibaf, he's put up a post overnight suggesting that they don't plan on compromising on any of the conditions that they've set forward with the U.S. So we're still very much in a situation of stalemate. That being said, we're heading up to a crucial week of diplomacy. We know that the President Trump is going to be meeting with his counterpart, President Xi, in Beijing in the coming days. We know that Iran is also going to be one of the items on the agenda. China clearly pushing for de-escalation and a full reopening of the Straits, given the economic benefits that it passes on to China. They're a massive buyer of Iranian oil, obviously. And so we'll see whether anything will come out of those conversations and whether China can actually exert more pressure on the Iranian side, even to water down some of their positions. At the same time, many of Trump's more hawkish advisors, some of the more hawkish senators, including the likes of Lindsey Graham, are also proposing restarting Project Freedom. Remember, that was that short-lived project that was launched about a week ago to help guide vessels forcefully through the Strait of Hormuz to reopen it up. They aborted it after a couple of days because it was seen to be too provocative. But perhaps one suggestion that they are moving back towards a more confrontation mode would be if they did restart that Project Freedom. So we're watching out for that in the coming days, in addition to anything that may come through on the diplomatic front as a consequence of that Trump-Xi meeting.
Exactly. It may complicate the picture this week, at least. Jumana, thank you so much. Jumana Brisechi in Dubai. And Japan, U.S. Treasury Secretary Scott Bessent meeting with the Japanese Finance Minister and Prime Minister Sanae Takaichi. The discussions ranging from monetary policy to President Trump's upcoming visit to China. Bloomberg's Molly Smith joins us now from Tokyo. So what were the main takeaways? What did Bessent and Takaichi speak about, and what did the Finance Minister tell us that the markets should be paying attention to, Molly?
Right. So Scott Bessent started his day in Tokyo today, meeting with the finance minister, Katayama. And Katayama spoke after the two's meeting. She basically confirmed that the U.S. and Japan have been coordinating closely on currency discussions lately, which something we pretty much understood was already happening. And it's not real. It isn't confirming that there had been currency intervention by Japan, but we also didn't really need to hear that explicitly from Katayama because we've already been able to infer that from looking at Bank of Japan accounts and to see that it looks like there was some intervention that did take place at the end of April. Granted, there still is suspected intervention that happened early in May, and the Golden Week holiday will have to wait to get updated account data at the end of May to confirm that that intervention did indeed take place. And Bessent spoke about that meeting later today after he met up with Prime Minister Takaichi, and he was speaking about his meeting mostly with Katayama earlier in the day, basically confirming the comments that she had made and saying that the two are working together well and that the relationship between the U.S. and the finance ministry is effective and that they are coordinating well on currency moves. So a bit more of the same from him. He also did acknowledge the strength of Japanese economy and that he expects that that will be reflected in the FX rate. We haven't really seen that today, though. There was a bit of a sell-off in the yen following Katayama's remarks, and then a bit of market twitchiness. We saw that the yen really strengthened sharply in the middle of the day, but now has been trading a bit weaker, more around the 157.60 mark in the yen per dollar area.
OK, we were well off that this morning at least. Molly, thank you so much. Bloomberg's Molly Smith in Tokyo. Now to other top stories trending on the terminal this morning. JPMorgan's prime brokerage business had its revenue soar to a record as clients seized on volatility in recent weeks. According to JPMorgan, clients are actively trading and adding risk. JPMorgan reported an $11.6 billion trading haul for the first quarter, an all-time high and up 20% from a year earlier. Amazon has begun the sale of its first Swiss franc bonds. It's part of a record 6-part deal in the currency. It's selling debt due in 3, 6, 9, 12, 18 and 25 years to raise money for AI infrastructure. The Bezos family gave $100 million to the Robin Hood Foundation at last night's gala, pushing it close to its $1 billion goal for a permanent endowment. The endowment will help sustain Robin Hood's goal of supporting New Yorkers living below the poverty line. Coming up, we go live to Paris for a conversation with Apollo's head of corporate credit. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. JPMorgan's Global Markets Conference is in full swing. Bloomberg's Francine Lacqua is on the ground in Paris. Francine.
Vonnie, thank you so much. Well, I'm delighted to be joined by John Cortese of Apollo. John, thank you for joining us. I mean, there's just a lot to talk about in your space. It's credit, it's trading, it's everything in between. First of all, I mean, you're trying to make the market a little bit more transparent. How transparent do you think this market will become?
In private credit?
In private credit.
Well, thanks for having me, first of all. Really nice to be here. And it's an amazing conference that JPMorgan puts on every year, so happy to do it with you. On private credit, I think the market for a long time was thinking about liquidity in private credit or transparency as a vice, not a virtue. A lot of times we were being told that we're creating a solution for a problem that doesn't exist. But I think most markets, I come from a public markets background, public credit background, generally our view is the more transparency you give, the more potentially liquidity you give as well, the better off for the asset class. It tends to grow a lot better. You have a lot more, I think, of the myths maybe of some of this asset class dispelled because people see it in front of them. So generally, we're making a big push towards it. You heard Mark in our call over the last week, and really excited to see what that brings to the growth of the business.
I mean, does it change valuations? Like, if you have a more transparent market, where do you see the different levels of entry points or valuations?
Yeah, we're very deliberate in which asset classes we're picking to have the transparency. I think we benefit from most of our assets are investment grade, and so if you look at the underlying volatility of them versus the underlying volatility of equity, for instance, much, much lower. Even the broadly syndicated loan market, if you look at that this year, the biggest drawdown we have with all the noise we had on software was about 1.5% for the index. In 2022, the biggest drawdown was 4.5% for a broadly based levered loan index. So our view is that if we're doing really high quality origination, which we pride ourselves on, in investment grade primarily, and even when we're doing sub-investment grade and hard asset, first lien, safe, we're happy to show what we do. We think it's the best in class. And yes, maybe it brings a little bit more volatility, but not as much as the fear of the volatility is in a way. So we're happy to lead the market that way.
John, when you look at AI in general and tech, where do you see, or hyperscalers, where do you see the biggest opportunities right now in credit?
Probably the most exciting time that I've seen in my career in credit, so about 25 years. And if I think about just big picture, the takeaway of U.S. corporate issuance in investment grade this year being higher than net treasury issuance. It hasn't happened in 10 years. It certainly hasn't happened since we brought our balance sheet to where it is. It's just an amazing concept of that issuance financing all this potential growth. But all that CapEx coming to our business, coming into the markets, turning asset-light businesses into asset-heavy businesses, bringing a huge amount of origination opportunity for us. A huge amount of supply also means yields going higher. And you have, for the first time, I've seen rate traders calling corporate traders saying, where are interest rates going? Because ultimately, the corporate issuer is the determinant of quasi-sovereign or really high-quality risk yield issuance. And it's all happening out the curve, long duration, which is great for us. So I think the biggest opportunity is all of that issuance is going to mean a huge IG, public and private opportunity. It also means that anything diversified from that, which Europe fits squarely into, is also of high value because it's less correlated with the huge amount of issuance that's coming to us.
What are the main risks in this? And actually, I mean, the opportunities in Europe must be different to what you're seeing in the U.S.
Yeah, I mean, the main risks are that this issuance is happening in a lot of different formats. It's happening in data center financing, it's happening in power financing to the data centers, it's happening in chip financing, it's happening in corporate financing, private and public. And so if you just blindly buy everything that's in the market today and it's being driven by one huge growth factor in the U.S., your portfolio is going to find itself very correlated at the end of this year, beginning of next year, which is a dangerous thing for credit. So for us, we spend a lot of time thinking about where are we making our bets, how do we understand that correlation and factor risk, and again, Europe not having that same kind of factor is a great opportunity for us because it gives us hard asset, but it doesn't necessarily also have a lot of the correlation risk that I think ultimately will be something the market has to worry about over the next year.
Which is why, I mean, just, to broaden out what we were talking about at the beginning is you're trying to bring trading to private markets, right? This is kind of like the underlying, what are the consequences of that if, certain other firms don't follow suit?
I mean, we're really spending time on what we're doing. I think that it'll be right or it'll be wrong. Our view is that the investor base wants more transparency, not less transparency, and it's good for them. The marketplace wants to see us doing things above the table, not below the table. So we're the most transparent firm in our industry. We show almost all of our assets out there for everyone to see. And others will follow if they think that's a good idea, or if their investors are asking them to do it, or they might not. Again, we're pretty unique in what we do. So I think everyone's going to have their own take on it, but for us and what we underwrite, very happy to show what we're doing real time to investors.
And John, going back to Europe, the appetite must be different. Does that bring more opportunities?
Huge, and it's different too in that you've got this industrial renaissance, we call it, right? But it's energy transition and power build and so much industry that's been kind of lacking in CapEx spending for many years now coming to the front. 500 billion euros being announced by Germany. And look at the deals that we're doing. Ørsted, RWE. These are hard asset financings, building power, building energy, building in, defense spending. And they don't, again, they're not because AI is driving that, because the countries need to kind of get to where the rest of the world is. So it's a great fit for us on hard asset, but also doesn't necessarily need to have, we're not making a bet on GDP. This isn't a GDP trade in Europe. It's us stepping in for a pocket of capital that is missing in this area that needs to come in to bring many of these sovereigns and companies to the 21st century.
John, thank you so much for joining us. That was, of course, John Cortese of Apollo. With that, Vanya, I'm going to send it back to you in New York. And coming up, we have Jamie Dimon.
Yeah, fantastic conference. Thank you so much, Francine, for that great interview. Later today, tune in to Bloomberg TV and radio for France's conversation with JPMorgan CEO Jamie Dimon. That's at 9:45 a.m. New York time, 2:45 p.m. in London. This is Bloomberg. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stock in stalemate, oil extending gains as President Trump says the US-Iran ceasefire is on massive life support. And Treasury Secretary Bessent and Japanese Finance Minister Katayama meeting earlier today, saying they're coordinating closely on currency policy. And all of that ahead of fresh inflation data in the US later this morning. This is what you need to see when it comes to your day's trading. Brent crude above $107 a barrel now as market jitters get ever so much more tense. New York crude above $101.50 a barrel and your 30-year yield above 5%. We also have futures pointed lower after albeit several days of gains. That said, the tone of this market is obviously shifting from AI exuberance back to the geopolitical reality that is the closed Strait of Hormuz and no movement whatsoever on any proposal related to any kind of permanent ceasefire. The dollar index then strengthening as well. Let's get to some individual movers now to London and Chloe Melly. Chloe.
Good morning, Bonnie. Hims & Hers is down about 14 to 15% this morning after guidance missed estimates. And so the telehealth company is facing those much higher costs as it transitions into branded products. And that creates some pressure on profitability and creates some short-term noise in the financials that analysts are saying are creating some quite messy results and might take a little bit of time to clear out. Moving on to Zoom Info, which is a company not of Zoom call fame, but another different company that does marketing and lead generation. And it's down significantly this morning, about 33%, after announcing a major restructuring program that will get rid of about 600 jobs and also cutting its guidance. It's been already a very tough start to the year for that company, and this guidance cut is piling on even more pressure for Zoom Info. And finally, the sneaker brand On is on the move this morning after lifting its outlook after what has been a very strong start to the year. This is a company that has been grabbing more and more market share from established players like Adidas, Puma and Nike, and it seems that it is very much on a roll, and so we're up almost 6% for On this morning.
Chloe, thank you so much. In the UK, Prime Minister Keir Starmer pushing back on calls to resign. We need to take a look at UK assets right now because we're seeing yields rise substantially, way more than the United States, for example. It's more than just the Iran story here. It is the Keir Starmer story. If you look at the 10-year yield and the 30-year yield, we're up 12 and 11 basis points, respectively. That 30-year yield at its highest since 1998. And you saw the pound depreciate pretty substantially earlier. During the cabinet meeting, apparently, Keir Starmer told everybody that he was staying on. Joining us now is Kallum Pickering, chief economist for Peel Hunt. Earlier this morning, Kallum, Eurasia put the odds of the Prime Minister being gone by September at about two-thirds, 66% or so. Is that an optimistic scenario at this point? Will he be gone earlier?
Well, markets are already considering who may replace Keir Starmer. I think what's more important is just to sit back and understand what the two problems are for the UK. So the first is, for all the focus on fiscal dynamics, the UK is not a fiscal outlier. If you compare to the rest of the G7, the deficit doesn't look abnormally high, nor does the debt. But what the UK has done more than any other country has pursued anti-growth and inflationary policies for nearly a decade. in a succession of very public policy mistakes. And that additional inflation is what markets have priced in. And so now when we look forward and we contemplate the options for if Starmer is out, who may replace him, this is the framework that markets are applying. And the danger here, this is a tail risk, is that Starmer could be replaced by someone who is further to the left, that attempts to raise taxes, raise borrowing, add more regulation onto the economy, and then worsen both the inflation and the fiscal outlook. That's what's being priced in today. Any sign that it's going to be either another centrist or even someone that's, say, a little to the right of Starmer, I think that comes as relief. So I wonder if markets are close to topping out, short of some disruption, but it depends on how things unfold.
What happens if he does end up staying on, Kallum? Will that not, inject some instability into the market too, though?
The uncertainty, of course, is an issue, but I don't think we need to be as vague as to say that the outlook is uncertain. There's a very specific risk that the market is concerned about, which is, will the UK layer on more employment regulation? Will it push up minimum wages and taxes even further? And will it just add to the problems which have already weakened growth potential and already added to inflation? There's no uncertainty. If we could take that risk off the table, it's an and/or question here, not a what happens next question. I think the market starts to look better. The problem that Keir Starmer has, and I say this just as a Brit observing the politics, his majority is actually much too big. Labour Party is a very broad church. You have people right on the left, you even have people on the centre right. Reconciling these two views is difficult. That's why he's having a hard time passing any legislation. It's why he does odd things, which is pursues anti-growth policies, but then at the same time will say that he's pro-growth. Anyone who replaces him faces this problem. And the danger you have is if someone replaces him further to the left, then you get factionalism appearing on the right of the party. If it's to the right, the market may be happy initially, but realise then the left are going to dig in. So with or without Keir Starmer, the central problem remains that Labour just cannot enact policy because of this fundamental setup.
Moving on to the US, we're going to get CPI data a little bit later on. Kallum, this market is already a little jittery today, and we're expecting a hotter print to come in. Can you give us some context around that?
Well, the market, I think, looking at Bloomberg consensus this morning, is expecting about 3.7 on the headline. Let's pay close attention to core. There'll be a bit of an oddity because of the shutdowns last year and the way that housing is accounted for. If there's an upside surprise on core, I think the market will reason that the US is looking a bit more inflationary. There are a few things here which I think pose serious uncertainties near term. First is, what will the Fed do under Roche? The market, of course, expects him to be a bit of a dove, but I think hawkish tendencies may prevail if it looks like the US is on course for substantial inflation. Economic growth data have been pretty good. But then when I speak to market participants, basically everyone's assuming that the Strait of Hormuz is going to be open soon. And so if you work on the basis that you get a big upside surprise or a downside surprise, which would normally move markets, to what extent will markets just say, well, let's account for this as noise if we don't change our fundamental assumptions? And so I'd scarcely imagine the market changes its baseline view, which is the Fed, which is the thing that matters here, stays on hold through summer.
Kallum, if other central banks need to tighten, and at the moment the market's pricing in 3 in the BOE scenario, then will the Fed be a little stymied? Will it need to look at what other central banks are doing as well?
Well, the Fed has two advantages. First, it's governing an economy that has the dollar. And so demand for dollar will remain structurally high as far as the eye can see. That depresses yields. It means that the Fed doesn't have to do the thing that the Bank of England, for instance, needs to do, which is maintain overall policy credibility. Right? Demand for the dollar gives the US and the Fed an exorbitant privilege. The second thing is the Fed is a dual mandate central bank. If it can, with a straight face, make the argument that, say, AI is going to depress employment, or the disruptions through the summer will weaken employment, it can tolerate more inflation in order to promote this second objective. That's very different from the central banks in Europe, especially the Bank of England, that needs to watch out for overall credibility, especially currency markets, and needs to consider that it's a single mandate central bank, cares squarely about inflation.
Can the economy withstand a 30-year yield at 5% and the 10-year very close to 4.43, creeping up to 4.50 again, Kallum?
No, but I would just broaden this out again. I'm sorry for making these broader points rather than single economy points. I think all major advanced economies are suffering from a bad case of crowding out at the moment, where bond markets are pushing rates up beyond levels that the private sector can tolerate. This is because, without exception, economies are going to see public debt rise as far as the eye can see. Just at the time when the market, the big pension funds and the like have had enough of this stuff, they're starting to price in more inflation, and this is now having a serious impediment on private sector economic activity. It's why every time we seem to break that 5% threshold on the US 10, the US administration, Trump specifically, starts to dial down the rhetoric regarding Iran. We're starting to see thresholds being hit now, and unless we actually get on a better track, I think this is just going to be par for the course, where we have this bond market instability wagging the economy repeatedly.
Kallum, thank you so much. That is Kallum Pickering there of Peel Hunt. Now to other top stories trending on the terminal this morning. Kevin Warsh clearing the first round of Senate votes on his Federal Reserve nomination. The Senate voted 49 to 44 to advance Warsh through a procedural obstacle, setting him up to be confirmed later today to the Fed board. A separate Senate vote to confirm him as Jerome Powell's successor as Fed chair is expected later this week. The Trump administration is delaying a plan to suspend tariffs on imported beef. According to the Wall Street Journal, the administration wants to finalize details after pushback from cattle ranchers and congressional Republicans. Pop Mart reported slower sales growth for the first quarter, the slowdown underscoring mounting pressure on the company to reignite momentum, especially in markets including the US, as the Labubu craze cools. Coming up, Roche gets a green light to sell a blood test that will diagnose Alzheimer's disease. That's in the European Union. An exclusive interview with the CEO of Roche Diagnostics, Matt Sause, is next. This is Bloomberg.
It's unbelievably weak, I would say. I would call it the weakest right now. After reading that piece of garbage they sent us, I didn't even finish reading it. They said, I'm not going to waste my time reading it. I would say it's one of the weakest right now. It's on life support.
The Trump administration taking measures to tame the high oil and gas prices as a peace deal impasse between the US and Iran drags on. The US releasing another batch of emergency oil to companies like Trafigura, Marathon and ExxonMobil, as well as weighing a possible temporary gas tax halt. Bloomberg's Kasia Klimaszinska joins us from Washington. So what's the next step for the administration here, Kasia?
Hello, Vanya. Unfortunately, the U.S. and Iran remain far apart. There doesn't seem to be any area where they could continue the talks. And as we saw, President Trump yesterday in the Oval Office told reporters that the ceasefire between the two countries is on a massive life support. The good news, I guess, is that Trump didn't threaten any military action. He did muse a little bit about perhaps resuming this operation where the U.S. would guide some ships out of the Strait of Hormuz. So it's clear that Hormuz remains the area of focus here. Everybody around the world wants to see the energy flowing again out of this region, not to mention China that Trump will speak to later. But one other area that Trump really needs Iran to talk about is their nuclear program. And this is where it looks like Iran is not willing and interested to engage.
Just want to ask you about the SPR release. Where does it leave stocks now of oil after that second release?
So I think, the markets here basically believe that no news is good news here, as long as there is no resumption of fighting. The oil is a little bit up, but not much. We know that for President Trump, the cost of oil, but more importantly, the cost of gasoline, perhaps jet fuel, is a focus for him. So he will make sure that those prices are not too high. You mentioned the strategic petroleum release. There is also this talk about perhaps imposing some sort of a holiday on federal gasoline tax. So Trump is looking for a relief, particularly as we have the midterm elections here in the U.S. in November, and he will not want Americans to suffer too much with this concern that if they do, they will, vote Republicans out of House and Senate, and the Republicans will lose the majority that they have right now.
Kasia, thank you so much for joining us this morning. That's Kasia Klimaszinska. Let's take a look at these markets because we have the VIX very close to 19 now as jitters creep ever higher. Brent crude above 107, WTI above 101, and that 30-year yield just off the 5% mark that we hit a few minutes ago. Turning to pharma now, Roche getting an EU clearance to sell an Alzheimer's blood test. Joining us is Matt Sause, CEO of Roche Diagnostics. Congratulations, Matt. I know this was a bit of a journey. What are the potential peak sales for this diagnostic, which might actually help diagnostics come back to sort of your pre-pandemic and pandemic years?
Bonnie, thanks for having me. So Roche Diagnostics, we're the world's largest provider of diagnostics tests. That's everything from the blood-based test that you would get with your GP to measure your cholesterol on to things like genetic tests to determine your probability of responding to a cancer treatment. And as you just mentioned, today we received clearance from Europe to be able to make accessible our blood-based diagnostic for Alzheimer's disease, which is a blood-based rule-in and rule-out. What I would say to answer your question is there's by 2030 going to be 50 million people living around the world with Alzheimer's disease. And the majority of people with Alzheimer's disease are never diagnosed. And this will be a blood-based test that will be able to be offered in primary care. And it will be the first of its kind to have that primary care indication. So we're really excited about the potential for our business and also for what it's going to mean for patients.
Do you have any kind of an estimate or any kind of hope for its peak sales potential?
So we don't disclose the peak sale of our diagnostics products, but what we are really excited about is the potential in neurology for us to be able to continue to make an innovative impact on patients around the world. We also, in the first quarter, received authorization for a test for neuroinflammation for patients with multiple sclerosis for a test called neurofilament light chain. Which can help physicians optimize treatment for people with multiple sclerosis, as well now as with Alzheimer's disease. And what you're going to see is more of these kind of tests from us as we continue to make inroads in neuroscience, because we feel there's a very large unmet medical need.
What are you thinking about the fact that we don't have a treatment for Alzheimer's yet? And will that slow sales to a certain extent? Because until there's a treatment, perhaps people won't really be looking to get diagnosed early.
Well, if you look at Alzheimer's disease, the earlier that people are diagnosed and put into appropriate supportive care programs, such as memory care, you do see improvement in overall quality of life and outcomes. And then there's also, of course, the pain of not knowing whether or not somebody has these diseases. And this is a test that can immediately address those concerns. And we have had quite significant interest from customers around the world on this particular biomarker. So we feel that there will be good adoption and a strong willingness from the medical community to look into this test.
And are you going to be engaging with the FDA on this particular blood test, Matt?
Absolutely. So we've received the clearance for Europe, for the countries accepting the CE mark. And the next step, we'll continue to engage with regulators around the world, including the FDA. Speaking
of which, you're investing a lot in U.S. diagnostics manufacturing. Is that primarily an impact of the tariffs and the political situation?
So investing in the U.S. for diagnostics has been something we've been doing for a long time. We have over 10,000 employees in the U.S. We have 6 manufacturing sites. We are a net exporter of diagnostics from the U.S., and it's a core innovation hub for us, and we expect that to continue in the years to come. So I would say it's all part of our long-term strategy, and the U.S. is a key part of that. It's our largest, and I would say on the commercial side, it's our largest market where we see continued strong growth.
Matt, you're actually building a machine that can sequence a full genome in hours. When it's ready, what will that unlock for us?
Thank you for asking that question. It's a really exciting program, which is our Excelio sequencing solution. As many people may know, the first human genome took over 13 years to be sequenced. This is a technology that will be able to sequence an entire human genome in under 4 hours. And so there's a lot of potential applications here, particularly in the future, in the event, for example, a baby in the NICU has an unidentifiable disease. You would be able to sequence the child and both parents and be able to get all 3 of those results within a single day. That's the potential that this technology has which is really addressing some of the medical needs out there that there is no current solution. So we're really excited about the potential with our Axelios technology, and we're here in London today for our annual Diagnostics Investor Day to talk more about it.
What is holding back the glucose monitoring in the United States? It seems to have not yet got approval, and I'm curious as to why it would be continuous glucose monitoring if it ever did get approval.
So we've launched our continuous glucose monitor, our AccuCheck SmartGuide CGM, in over 45 countries. And what we're doing is continuing to scale up our manufacturing and our commercial presence. You mentioned our U.S. investment. One of our investments is to build a manufacturing plant in the U.S. for our continuous glucose monitor. So we're scaling this product up as planned, and the U.S. is certainly going to be part of that. So we're looking forward in the near to midterm to be able to launch that in the U.S.
You know, there's been China pressure. It's been obvious. Diagnostics, obviously, one of two prongs for Roche overall. Can U.S. growth offset the problems that you're seeing in China?
So, I mean, that's something that we've shown last year and this year, where despite the challenges we had in China, and I would call it in China, the decline we had was something that all companies in the in vitro diagnostic space were affected by, which was healthcare pricing reform. In spite of that, we continued to grow last year, and we grew again here in the first quarter. And what we have seen is the strong growth in the U.S. as well as in Europe, Latin America, and the rest of the world has offset the challenges we've had in China. But I would say that we've seen improvement this year with China, and this is something we expect to see stabilize next year.
All right, Matt, congratulations on your EU clearance for that blood test for Alzheimer's, and we look forward to talking to you again. That is Roche Diagnostics CEO Matt Sause. Coming up, CPI data in just a few hours will get you set up for your trading day. This is Bloomberg. Now a look at what's ahead today. First up, we get ADP employment change. That's at 8:15 Eastern Time, followed by the main event, CPI data at 8:30. Then $42 billion of 10-year Treasury notes are going on auction at 1 p.m. Eastern. We'll be able to gauge demand and appetite. And we get Fed speak today from Williams and Goolsbee throughout the day. Let's take a look at some of your pre-market movers. Then Hims and Hers extending their post-earnings declines that we saw yesterday, reporting a first quarter loss in sales that missed estimates there for Hims and Hers. Been a very volatile year. AST Space Mobile, satellite internet company's first quarter revenue missed expectations, and it's taking a big hit there. And then a better story for On Holding, the footwear company backed, of course, by tennis star Roger Federer and Zendaya, raising its profit outlook for the year. This is your macro picture for a day that is bound to be a little bit jittery with the VIX at 19. That's it for Bloomberg Brief.